The global dairy market is going through a turbulent phase. After several years of positive farm gate margins, milk output across major exporters has surged while demand has softened. The result? A steep drop in dairy commodity prices and growing concerns about oversupply. To look closer at what's driving this imbalance and what it could mean for prices in the coming months, I'm joined today by StoneX Director of Dairy Market Insight, Nate Donnay. Thank you for joining us, Nate.
Thank you, Fiona.
So, Nate, I alluded to it in the introduction, but could you tell us what's behind the sharp fall in global dairy prices during the third quarter?
I think you hit most of the issues on the head. Whenever we see changes in pricing, there's always a combination of supply and demand factors that are driving those changes in prices. But I think right now we have to place most of the blame for these lower prices on the supply side. We saw record high milk prices or near record high milk prices in late 2024, which continued through a good chunk of 2025. And that combined with lower input costs resulted in very good margins for dairy farmers around the world. And consequently, we're seeing stronger milk production growth across the major dairy exporters. We're also getting some benefit from less disease impact this year than what we had last year. We had bird flu in the US and blue tongue in Europe that were significantly dragging down milk production in certain parts of those regions. And luckily, we haven't had much of an impact from bird flu or blue tongue this year. Now, we've also seen, the demand side hasn't been great. It's not doing anything to support prices. Depending on the product and the region that you look at, domestic demand in the US, Europe, has been basically flat, maybe up a little bit, again, depending on the product and the time frame that you look at. So we're not getting much support from domestic demand, and globally, year-to-date imports are roughly flat year over year. So we're not seeing more demand from importing countries either. So we've got this supply side that's growing significantly. We've got a demand side that's flat to maybe up a little bit. And consequently, we're seeing sharply lower dairy prices.
And the US seems to be leading the production surge. Can you explain what's happening there?
Along with the good margins incentivizing some milk production growth, we've also had a record amount of new cheese processing capacity that has come online between late 2024 and into 2025. This capacity was well advertised. The plants were out there talking to cooperatives, talking to dairy farmers, saying, we're building these plants. We're going to open the plant on X date, and we need milk to run through these plants. So dairy farmers have been busy expanding existing operations or building new farms near these new cheese plants. And that has helped to drive milk production higher in states that have new cheese capacity. So far this year, well, really over the last 14 months, U.S. dairy farmers have added 197,000 cows to the milking herd, which is about a 2.1% increase. It's the largest increase that we've seen in the milking herd since, well, in at least 25 years. So it's really been a monumental achievement, and it's driving a big part of the growth that we're seeing in U.S. milk production.
And how does the situation in Europe compare, and what role has blue tongue played there?
In Europe, the dairy herd in Europe declines almost every year, and so we're probably not seeing an expansion in the dairy herd, but we are getting some benefit from a shift in calving that has happened due to blue tongue. Blue tongue is this virus spread by biting flies called midges, and it was hitting big parts of France, Germany, Belgium, Netherlands last year, these major milk producing countries. Um, and it when the cows get infected with the blue tongue, it makes it difficult to get the cows pregnant again. So it has shifted the calving a couple of months later in some of these heavily blue tongue affected regions. So cows that would have been calving and started giving milk in April, May, June are calving July, August, September this year. And that's resulting in stronger than normal milk production for this time of year. I've done some analysis and some modeling around this, And it's very interesting. If you look at the milk production in countries that were heavily impacted by blue tongue last year, that's really where we're seeing the very strong growth compared to normal seasonal levels this year. For other countries that weren't impacted by blue tongue or weren't impacted very much, they're still following their normal seasonal production pattern. So when I try to break down how much of the growth in Europe is coming from good margins versus how much is coming from a shift in calving, it's about 1/3 of the growth, at least in August, is coming from a shift in calving. But really, 2/3 of the growth is coming from the record high margins that European dairy farmers have experienced over the past 12 months.
And another major producer is New Zealand. Production there is also rising. What's driving confidence there despite the lower global prices?
Yeah, I hate to sound like a broken record, but the milk price in New Zealand last season was record high, and we don't have their official cost of production data yet. But based on market pricing and our modeling, the cost of production probably declined in New Zealand last season. So, record high milk price with declining input cost, farm gate margins for the average New Zealand dairy farmer were probably record high last season. And that very good profitability combined with some relaxing of environmental rules or really um, not implementing proposed tighter environmental rules has helped to raise farmer confidence inside of New Zealand. And that's probably also helping to boost the milk production from that country.
And given this global oversupply that we've talked about, what are the key bullish and bearish factors to watch heading into 2026?
The market feels very bearish right now, depending on the product and the region that you're looking at. Some of these dairy prices are down 20 to 40% compared to a year ago, and they're still declining. We're seeing production growth in the US and Europe up over 4% during August once you adjust things for the higher components in the milk. And for the past 3 months, New Zealand's production is up over 4% as well. A long run growth rate for milk production, the average is in that 1 to 2% range, not 4%. So clearly, production growth is exceeding consumption growth and inventories are building. Dairy prices are falling. That's going to slow down milk production growth eventually, but there's a long lag between changes in commodity prices, and then those commodity prices have to flow through to milk prices, and then dairy farmers have to see those low milk prices for a couple of months before they start to cut back on production. So we're still a few months out from a significant slowdown in milk production, and we're going to probably continue to overproduce and build inventories further here as we move through the fourth quarter. And those inventories are going to overhang the market once production does eventually slow down. So I have to say that it feels mostly bearish, but there are still some bullish risks here. These lower prices are going to boost demand. We're already seeing some grocery store chains in Europe lowering milk prices on the shelf. In the US, we're hearing about strong promotional activity around butter that will be ramping up for the year-end holidays. So these lower prices are going to boost demand. On the supply side, we still face disease and weather risk. While blue tongue and bird flu had less of an impact in 2025 than they did in 2024, those viruses are still out there, still spreading, and they could come back, especially as the weather warms up in early 2026. But on top of those two viruses, we've had outbreaks of foot and mouth disease in Europe, of lumpy skin disease in Europe. We have the New World screwworm making its way northward in Mexico, coming towards the US, and there's a risk that that shows up in the US here as well. And then weather's always a risk, especially in production systems that are reliant on pasture like New Zealand. New Zealand is close to their seasonal peak in milk production here in late October. Anything that affects grass growth is going to affect milk production growth. So if it gets too wet, if it gets too dry, we could see New Zealand's milk production growth slow down due to weather issues. And then lastly, it's not all bad news. We're continuing to see strong demand for high protein milk powders. Companies are adding protein into all kinds of consumer products. Starbucks has come out with high protein drinks just this week. The makers of Pop-Tarts and Doritos have announced new high-protein versions of those products, and that's pushing the prices for high-protein products like whey protein concentrate and whey protein isolate up to record high levels. So it's really been a bright spot for dairy in the past 2 years, and it looks like it's going to continue to be a bright spot for at least the near future.
Well, thank you very much for your analysis once again, Nate. For deeper insights and analysis, scan the QR code or click the link in the description to download the Quarterly Commodities Outlook.